Good afternoon. Welcome back to Money Control's live stream. You're watching Closing Bell with me, Lovisha, Darad, and my colleague Yatin, Mota. Well, it looks like we have had a terrific Tuesday for markets, Yatin. Bulls have been recharged and markets have once again extended its gains to third straight day. We saw Sensex rose to the day's high of 18,950 odd levels. So 81,000, that could be on charts in the upcoming sessions. Even Nifty that we were eyeing for it to cross the 23,350, it did see a good upside after it broke above that level and claimed the day's high of 24,481. So just less than 20 points away from 24,500. Even the market breadth, that was fairly positive amid support from financial as well as metal stocks. However, on the contrary, the FMCG and realty stocks saw a bit of a profit booking and they sulked in today's trading session. Yet then, a bright day for the markets. We are set for a positive December series for so far, and it looks like 25,000 that could be possible for Nifty in the near term.
Absolutely, and a trading session today. If you look at the last three trading sessions, cumulatively, Nifty is broadly up 500 points. And as you're mentioning, we are just 20 points shy from that 24,500 mark. So the bulls are back in control. We have taken a good support at the 200-day moving average, and after testing it quite a bit, and if you look at the technical indicators, clearly indicating that now possibly bulls are in control. Advance decline ratio almost 3:1, so good market breadth. And if you look at the sectors, PSU banks, media and metal stocks were shining in trade.
That's right. If you look at some of the top Nifty 50 gainers and losers, well, we can see the likes of Adani Ports, NTPC, Adani Enterprises, Axis Bank and SBI topping the Nifty 50 gainers list. Adani Ports, of course, definitely coming on the back of a healthy business update for the April to November period, as well as Adani Enterprises. The parent entity is also seeing good gains and it has settled about 2% higher in today's trading session. Some of the banks name, Axis Bank and SBI also doing well on the Nifty 50 front. But if you look at some of the Nifty 50 losers, what did not do well in today's trading session comprises the likes of ITC. We will be discussing how the stock has performed because of the reports given that the GST Council might be looking at raising the tax to 35% on December 21. But we'll see how the stock is going to perform. It is down about nearly 1% in today's trade. Apart from that, we can see HDFC Life, another insurance firm. Yesterday also HDFC Life was not doing well. Today also it is down about 0.8% in today's trade. Apart from that, we can see Bharti Airtel, Hero Motocorp and Sun Pharma also not doing well. But broader markets, mid caps and small caps, they continue to outperform. Yatin, what do you make from the broader end of the markets?
I think if you look at the broader markets, the advance decline ratio clearly showing the strength in the mid cap and small cap stocks. If you look at the gainers, HEG and graphite, the graphite stocks clearly doing well, almost 10% each higher in trade. In fact, HEG was up 14%. KPIT Technologies, Torrent Power and BLS International were the other stocks which are gaining. In fact, if you look at KPIT Technologies, this is one new FNO inclusion which has seen good open interest build up and a 6% move coming in. What was not doing well, and we'll talk about it in detail, Granules down 10% after the US FDA classified their plants under the official action initiated status. MapMy India continues to struggle, 9% down. And two stocks to focus on. One is Indegene and the other one is TBO Tech. Both of these stocks saw block deals, post which 4 to 5% downtick was seen there. Deepak Nitrite and Manya were the other stocks which were struggling in trade. Both of these stocks were new FNO entrants. So overall, a good trade in mid cap space with stock specific action continuing on Dalal Street, Lovisha.
Let's move on and break down the stocks that were in focus on the Dalal Street today. Well, the first stock in focus is definitely the top Nifty gainer, that is your Adani Ports. The stock gained over 7% in today's trade on the back of healthy business update. Well, not just Adani Ports, but overall all Adani stocks have advanced and they have recovered its loss after their sharp fall in recent days that we saw. When it comes to Adani Ports particularly, the company said that its cargo volumes grew by 7% year on year during the April to November period. Even container volumes rose by 19% year on year during the same time frame, and liquid and gas volumes rose by 7% year on year. Now, apart from its business update, yesterday we saw Care Ratings had also upgraded credit rating of its recently acquired firm Gopalpur Ports to stable. Apart from that, we can see that most of the brokerages are also sharing a buy rating on the counter. First up is your Nuvama Institutional Equities, which has shared a buy rating on the counter and has shared a target price of 1,960 rupees per share. Nuvama believes that the positive outlook will be driven by strategic investments in the logistics and the tech-driven advancements going ahead. Yatin, what do you believe? A lot of positive comments coming in for the Adani Ports stock. After the recent fall, we are seeing quite a good recovery for Adani Group stocks as well.
Absolutely, and today, Lovisha, there was a report by Bernstein also in which they pointed out that the Adani Group in general are much better off than what they were 12 months back in terms of debt position, in terms of profit growth and in terms of overall balance sheet strength. I think now that the event of the US corruption charges is behind us, a lot of clarification has come in from the Adani Group, and I think after that initial knee-jerk reaction, all of these stocks are regaining momentum in trade, especially when the markets are up 500 points. All of these stocks are trying to get back to the old levels from which they fell. So in general, a great trade for Adani Group, especially Adani Ports as well as Adani Green. Both of these stocks were gaining good momentum in trade today, and as you were mentioning, a lot of momentum in the quarterly update as well.
Let's move on to the next stock in focus, that is your tobacco stocks, that is cigarette stocks, which grabbed the limelight in today's session. We saw the shares of ITC, Godfrey Phillips as well as VST Industries that fell up to 3% after reports suggested that the GST Council might raise tax on tobacco and tobacco related products to 35% from current 28%. Now, under the current rules, cigarettes attract a 28% GST along with a compensation cess which ranges from 5% to 36%. Now, this compensation cess depends on the length of the cigarette. The longest cigarettes would attract the higher band, that is your maximum cess of 36%. Now, this GOM report that is expected to be discussed by the GST Council later in the month, which is your December 21st, and a final decision will be reached then itself. Now, cigarettes, that is a significant contributor to ITC's overall top line. It is also one of the major businesses for ITC aside from its FMCG and other agri, paper and hotels. Even for the September quarter, nearly 40% of ITC's top line came from its cigarettes business. So what Macquarie believes after this GST Council reports that have come out is that the levy is over and above if the levy is over and above the existing compensation cess, ITC will need at least a single-digit price hike to offset this increase in taxes. Yatin, ITC that has already been an underperformer this year, and this news doesn't add any more optimism to. What do you expect? It looks like a difficult path ahead for ITC.
I think a lot of things depend on the GST Council meeting. Yes, it is easier to do a sin tax on aerated beverages as well as tobacco products. ITC obviously for the longest time has been in focus whenever the budget is there or whenever GST Council meeting is there, whether or not taxes on the tobacco products and cigarettes move up. Obviously, it's right now a proposal. A 28% GST, moving to 35 for tobacco products along with cess would mean that ITC would have to raise cigarette prices by at least high single digits according to brokerage reports. Obviously, cigarette when the price hike happens, it is to be seen whether or not this GST hike comes through. Price hike, how does it impact the volume growth? Because market will really digest this entire news bit in over a next 1 or 2 quarters kind of a timeline, whether or not this impacts consumption or not. But yes, clearly today was a day where the markets were trying to digest that 35% new GST slab for aerated beverages as well as for cigarette products and tobacco products. So things need to be waited and watched. But yes, stock clearly showing some bit of weakness in trade today. But what also saw some weakness in trade today was Granules. The stock was down 12% intraday after the company informed the stock exchanges that one of their units close to Hyderabad, which is the Gagilapur unit, has got an OAI from the US FDA. Now, OAI means Official Action Initiated status for the plant. Remember, the company got 6 observations to best of my knowledge a few months back. This plant in Hyderabad, which is close to their headquarters, contributes 70% of total revenues. Few days back on the analyst conference call, the management was confident that by December they will be able to resolve the problems in the plant. But to the setback of the investors, today the company informed that the plant status has now been to OAI, which means that the company will have to do more compliance on the quality control as well as various other issues which are there in the plant, and then go for a re-inspection possibly 3 to 6 months down the line. So I think this news clearly was not anticipated. The management assured investors that all is well, but with the US FDA reclassifying the plant to a OAI status meant negative news flows for the counter, and hence a 12% intraday dip coming in for the shares of Granules. In the FNO series, the open interest was more than 150% higher to last day, which means that the stock is most likely to also come in the FNO curve tomorrow.
Let's take another stock in focus, that is your recent listing, Swiggy. Swiggy shares zoomed about 10% to hit a fresh high ahead of its Q2 numbers. Now, after making a decent debut, the stock has already jumped about 39% higher than its IPO price. Now, following its entry on the exchanges, now both the domestic as well as global brokerages, they have provided a positive outlook on the company. For instance, UBS had initiated buy coverage on the stock with a target price of 515 rupees. They believe that the stock is priced at a 35% to 40% discount to Zomato and sees room for further valuation gap to narrow, as Swiggy demonstrates a good market share, stabilizing market share going ahead. Even Motilal Oswal, even they initiated a neutral rating on the counter and shared a target price of 475 rupees per share. Motilal Oswal believes that or the all-in-one app approach, which enables the seamless cross-utilization of services, would drive operational efficiency for Swiggy. Yatin, Swiggy, the stock hasn't seen any significant pullbacks, and it has sailed quite smoothly even after its recent debut. Even brokerages quite remain optimistic on the counter. So this proves that the new age counters are the flavor of the street at this point of time.
Now, why not? The disproportionate growth that these guys are getting in quick commerce is something commendable. In fact, if you look at companies like Zepto, Zomato or Swiggy, what they have done apart from the food delivery business is that get more turnover and volume from the quick commerce food business. They have been challenging big retailers like DMart as well as Reliance Retail in this space, trying to get market share, trying to get some volumes from the Kirana stores. So I think the kind of growth which is exponential is liked by the markets. Obviously, Swiggy just reported their quarterly numbers a few minutes back on the stock exchanges. The fine print is awaited, but I think their overall food business margins as well as the quick commerce or the e-commerce business updates are something which will be examined by the markets. Stock has already rallied, as you mentioned, to the issue price by nearly 39%. So whether or not this rally has more legs will depend on the analyst call as well as the breakup of the earnings that Swiggy has just announced. But yes, Zomato, Swiggy and Zepto, these are the three big quick commerce players which have grabbed the attention of investors, and clearly that shows at least in the share price of Zomato as well as Swiggy.
Right. All right, with that, we have come to an end of this edition of the Closing Bell. Tomorrow we have the RBI MPC meet, which will be kicking off its 3-day meeting, and we'll be watching out how the policy meet goes on. But it's a wrap from me, Yatin and me. Thank you for watching, and stay tuned to moneycontrol.com for all the news updates and market insights.